Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Rakesh Sharma, ED at Bajaj Auto joining in. Rakesh, always a pleasure to have you on the show. A very warm welcome. My first question coming to you is, with all the difficulties that we have been facing on the back of COVID, in spite of all of this, we've seen a steady set of numbers, in fact, spectacular kind of April sales numbers as well in these challenging times. If you could just help us understand what has helped and do you think this is sustainable?
Thank you, Hiral. Thank you very much for having me on the show. It's always a pleasure to chat with you. Yes, the last few months have been satisfying. And I think these challenging times are bringing to the surface the inherent strength in the Bajaj portfolio, which arises actually from its diversification, in the sense that we have exports and we have domestic business. That is one level of diversification. Within exports, we are spread out in almost 70 plus countries, which out of which at least 30, 40 contribute very meaningfully. So, that's a little bit of a risk mitigation, because something goes up, something comes down, they cancel each other. The third thing is that most of our exports revenue, almost over 80-85%, comes from markets where we are number one or number two. Now, this does two things for us. One is, whenever there is a demand recovery, by the sheer reason of our leadership over there, we are able to capture the recovery very well. And secondly, we enjoy a little bit of pricing power compared to the Chinese and even other Indian exporters. Our prices are higher, and we have been facing cost increases, so we are able to pass them on. So this diversification, this versatility of the portfolio, we sell 100cc bikes in Africa, and we export 400cc bikes to KTM, which are sold to the adventure seekers in Europe. So this versatility of the portfolio, the diversification across geographies, and the substantial component, over 50% of our exports, gives an inherent strength in these times when the domestic market has been reeling under the impact of pandemic. And I would say that is the primary reason for coming out with steady numbers.
Right. So, with this, we understand that the domestic business is still slightly tepid. Exports are doing fabulous. So, how has the share between exports and domestic markets changed right now in terms of the revenue side?
So, generally, exports was, let's say, if I take FY19 or FY20, there was an equilibrium of about 45% of exports and 55% of
Mm,
domestic. I'm obviously including the three-wheeler business also in this.
right.
Then it has risen to beyond 50%. But of course, in the immediate April and this period, it's in the high 60s or 70s,
Mm,
but because also the domestic business is almost coming to a very coming to a sort of a grinding halt because of the seriousness of the COVID. So that's an unnatural number,
mm.
not because of exports, but because uh, of domestic shrinking. But I would say, yeah, equilibrium would now, the new equilibrium, I would say, going forward is about 55% or so.
Okay. And with this now on the export front, which are the markets which are going to be growth drivers and which are aiding this kind of performance?
Well, we find that demand has come back quite nicely in Africa and Latin America. So these two continents are going to continue to drive growth. Africa's volumes are much higher. They're almost 50% in our portfolio.
Mhm.
Latin America is smaller, which is about just a tad less than 20%. But Latin America is very important because our share of the premium end of the portfolio is very high over there, and it therefore reflects in our profitability. We've also got South Asia. In South Asia, I would say Bangladesh is doing extremely well. What is still lagging behind in recovery is ASEAN. We have a very big presence in Philippines, which has been slow to come back. And Sri Lanka is almost sort of out of the game because they banned imports till the end of 2021, till December 21. So I would say Africa volumetrically, Latin America also volume, but also from a margin point of view, and countries like Bangladesh are will continue to drive growth.
Right. Another aspect on the export front, Rakesh, is that a lot of sales from the month of March had moved to the month of April, and hence we did see a major bump up that did come in terms of where the export numbers were concerned. Now, if we have to look at the next 3 to 6 months, what's the absolute number kind of trajectory that we look to maintain? Will we stay in that 2.5 lakh per unit, units per month kind of a bracket in terms of exports?
Yeah, so you're right. The 2,50,000 odd, which we have done in April, is really partly because almost 34,000 units spilt over from the last financial year because we closed the last financial year a little bit early. So let's say the underlying performance is about 2,15,000. And I would say that, yeah, anything that would be the sort of give or take, because there'll be some dull months now coming in I think June or July before it again picks up. But yeah, our aim is to continuously do over 2 lakh units in exports.
Right. And what's your anticipation with regards to where the domestic market is concerned? When are you expecting the demand situation to start improving? What are you building in terms of your, matrix with regards to production, with regards to how sales would probably look like for the year?
Well, Hiral, the to forecast the year is very
Mm,
difficult. We are back to almost. I mean, if I keep the exports aside in domestic, we are back to. You remember last year, quarter 1 was a very similar situation. So right now, I would say that let's say that when we started April, I can recall that almost by middle of the April, almost 25% of our dealerships were closed,
mm,
which is approximately 25% of the business because of lockdowns. And as we have exited April and entered May, about 50 to 60% of the dealerships are closed. And a further 10-15% are operating under severe restricted hours. So I would say that 60 to 70% of the stores and this would probably be very similar for the entire industry. So we are definitely looking at, I mean, April was lower. Generally, April should be about 10% more than March because of the marriage season in the north.
mm.
But this time it was 35%, 35% for the industry, lower than March. And I think May is probably going to be much lower than April. Now, its recovery, as we all understand, it's completely dependent on how COVID moves and how the vaccination program moves. But one thing I can say, if COVID recedes and vaccination program advances strongly, demand recovery is very swift. That was something which surprised us all last year, if you recall. We were coming out of this period by end of June and July. Uh, Things moved very fast, and the customers came back to the dealerships extremely quickly. And I have no reason to believe that if COVID recedes, demand recovery should occur very quickly. However, it's anybody's guess whether we are in the middle of the wave or towards the end of the wave or whatever. So we'll just have to take it week by week. But
Mm.
right now, things are looking very, very difficult in May.
And Rakesh, if you have to look at an outlook with regards to where KTM is concerned, currently what percentage of our business contribution comes from KTM, and how are we expecting it over the next couple of months, or probably the next 2 to 3 years?
So, exports to KTM is another very good growth driver for us. That has almost doubled this year, signifying that the demand recovery in the developed markets has been faster. Plus, plus what has happened is that in these difficult times, people overseas, these countries, people have been able to save money.
Mm.
And the outlets for leisure activities have not been so much. So a lot of the outdoor activities have got promoted. And in that, the KTM bikes, the adventure bikes, the motocross, a lot of across the portfolio, KTM has experienced a surge in demand. And part of that surge has come to us, and we have been trying to satisfy that demand. So that is that's sort of almost doubled. It's going to continue to remain at that high level, and it's being factored in the 2 lakh plus exports which I talked about. In India, the that segment for us is very small. We do about generally about 6,000 units out of our, let's say, 1 lakh 90 2 lakh units. So you can imagine it's very small, good margins. uh, that segment has done well. It has not declined last year. We don't expect, we think there will be growth this year. But of course, when the dealerships are closed, then nobody can do anything. So right now, that is also plummeting. But over the year, I think the higher you go up in the demand pyramid, the
Mm.
better the performance of the segment is. And KTM is doing pretty well in India, and we are investing quite a lot behind the brand and behind customer experience for people who buy KTM products.
Right. So with this, yes, we do have presence at entry level, mid level, as well as on the premium side as well. And our focus has been to grow the premium segment. Uh, Taking the current situation into consideration, will that strategy continue? Or do you think now increasing volumes in the domestic market by focusing on the entry level and the mid segment is something that needs to be relooked at?
Well, if you look at last year, there is a real dichotomy in the performance of the market. If I slice the demand pyramid for 125cc and above and 124cc and below, you will see an almost contradictory performance.
Yeah.
Because the 125cc and above market has segment has uh, dropped marginally. I think -3 for the industry, -3% or something. Whereas the bottom half of the demand pyramid, that there really the bottom has fallen out, and it is dropped in huge double digits. It reflects that the dichotomy of the economy in general, because the employed people, nobody has lost jobs. There have been savings because of the stock market. There is a sense of well-being. Whereas in the bottom half, people have got very badly hit. The self-employed, the contract workers, and all that. And that dichotomy we are seeing. I think that dichotomy is going to persist, and we will see a better growth in that top half of the segment. And a part of it is also contributed by Bajaj, particularly in the 125cc.
Mm.
So we are going to keep driving the 125cc segment. We are put in a new product also in April. We are going to drive the 250cc segment also. It's a smaller segment, but we feel that the customer is ready to get into a quarter liter class. World over, the quarter liter class is a mainstream class. In India, it is not yet. And we feel that we should invest behind that, and we are doing that. But in the bottom half of the pyramid, whereas
Mm.
our main focus is in the top half, but even in the bottom half, in the entry level, what we have now done is we have sort of introduced better products. So we are saying even those people who are operating over there, if there is a person who's buying a 100cc, let me give him a 110cc. If there is somebody who's buying drum brake, Let me give them disc brake. Let me give a more safe bike. Let me give a more comfortable bike and try in smaller steps to move the customer up because that improves our realization and margins both.
And that's an interesting strategy that you're adopting as well. Now, again, on the margin front, we are seeing commodity costs which are going up the roof right now. Taking that into consideration, yes, companies are taking cost cutting measures, to maintain margins. Any price hikes that will be on the anvil? And from here on, do we see a upward trending trajectory with regards to where the margin profile goes?
So yes, this it's a sort of a little bit of a double whammy in the sense that precisely at the time when there is softness in demand, the commodity prices are going up, and there is a upward pressure on costs. We are looking at 3 to 4% type of a cost increase in the next few months, and as you know, that comes immediately comes in one slug. We have taken price increases in 1st April, and I must say that I think our price increases, both in domestic and particularly international, are ahead of competition. But having said that, uh, we need to be careful because demand is soft, and we don't want to fracture or impair the recovery in demand. So we have not passed on the whole increase, maybe 1.5% out of the 3.5%. And we're going to watch how demand comes back, how competition responds, and then try to take some more price increase. So there are margin headwinds, but we are hoping that our premiumization strategy, which has actually really given us very good. I mean, if you just look at our realizations per vehicle, they've gone in for quite a handsome increase.
Correct.
And despite cost increases, we have sort of improved actually our margin in FY21 compared to FY20. So we are hoping that these cost increases will get a little bit mitigated by the premiumization strategy, maybe a little bit benefit we'll get of the foreign exchange, the rupee becoming softer, with the exports at 55%, that flows to the bottom line. And if finally the government does announce the ROTTEP benefits, etc., they will add to the bottom line. So with these three things, hopefully we will be able to counter the pressure which is there from the cost side on the margin and come out at a sort of an even situation.
Right. And overall, with regards to capacity expansion, we're looking at a fourth plant in Chakan with an spend of almost 650 odd crores. So, what is the kind of timeline that we're looking at, and how much capacity will that plant add?
Well, that is more to address the requirements of our premium end of the portfolio, including electric vehicles. So it would add up to about 1 million units, and I think end of 22, early 23 in phases is when it will come on stream.
Right. And very lastly, Rakesh, what's the view that you hold now with regards to where the EV segment is concerned? Because this was one segment that was talked about a lot. People were expecting massive changes to come in. However, COVID has come in at a bad time. In fact, we did launch the Chetak as well. There were we halted bookings in between due to the pandemic related challenges. So now, how are you seeing the space evolve? How are you looking at sales with regards to where Chetak is concerned?
So definitely we see that the electric vehicles will be progressively more and
Hmm.
more a larger part of the portfolio. And at some point of time, this transition will occur. We have not yet reached the point of inflection because it is dependent a lot on the acquisition costs. People say that there is acquisition cost and charging infrastructure, and which will address the range anxiety of customers. But I personally believe that if there is a business case, if the prices of batteries drop and the initial purchase price of the vehicle drops, then there is enough entrepreneurs are there in the country to set up charging ecosystems, and that will no longer be an issue. What the single most and the most fundamental issue is the purchase price, and it's very difficult to predict that, because right now there is not enough supply also. There's also the semiconductor shortage, which has impaired the Chetak availabilities. So that's still probably, if I take a consensus view of what different consultants, people, vendors are saying, it seems that it is still about 2-3 years still away before the prices really drop and the electric vehicle becomes equivalent to the ICE vehicle. And when that happens, we can see a massive sort of flow into electric side from the ICE side. And we are preparing for that. Chetak is our first move in that direction. We have had a resounding reception from the customers. When we reopened the bookings, we got so many bookings that we had to stop it in 48 hours. Because on the supply chain side, some of our international vendors have not been able to give us a good view of availability because of the semiconductor shortage. But we have been told, our understanding is that by May and June, we will be able to get slightly longer term. Right now, our planning horizon is just a week, to let you know.
Absolutely.
But by May and June, this horizon is going to increase, and we will be more confident of going to the customer and opening the bookings again and actually rolling out into more and more cities. Because we also don't want a very large waiting list, because the customers do get quite hassled about not being able to get the vehicle which they want.
Right, right, right. So Rakesh, how long between Chetak and the next launch that people will have to wait, or you think it's the best to look at? Because currently, I don't think so that every quarter we could see a new launch coming in the EV segment, taking into consideration the challenges that the entire segment would be facing. So how long do you think Bajaj will also wait to get a new launch?
See, our primary objective in the immediate phase is to really build capability in terms of our understanding of the technology, relationships with vendors, understanding of customers, what is the kind of portfolio which we need, and to actually calibrate our volume expansion or portfolio expansion with how the industry is shaping up. We also don't want to just rush in and have failures or have false starts because the market is so nascent right now. So at this point of time, we are really not driven by a volumetric objective or a market share objective, but we want to be at the forefront of building capability for this, so that as and when the market sort of expands, which is based on the pricing of the components, we will start to expand our own portfolio. So we are working, we are preparing, but I would say the expansion of the portfolio, the next steps, we need to see how the market will expand.
Right. And very lastly, Rakesh, a lot of auto companies have started taking production cuts right now, taking COVID into consideration. Anything on that front at Bajaj as well?
No, Hiral, we are not taking any production cut, because as I was telling you, that we've got a substantive order book. And we think that, of course, it's very important to be safe. And, we have so many workers and employees coming in. While we have really brought down the attendance at the offices, but we want to keep the wheels of the business moving, because there are contractors, there are people who work in canteens, there are transporters, there are drivers, there are vendors and employees of the vendors who are dependent on this. And luckily, we've got the export portfolio, and that gives us enough of a volume to keep the factories running, and we don't see any need to, stop production.
Right. All right, Rakesh. Thank you so much for sharing all of this information with us and enlightening us of what we could be seeing in the future. I hope you enjoyed the conversation. Thank you. Stay safe and speak to you soon again.
Thank you very much.
Thank you.
Bye.